And unless you're just banking on permanent for multiple expansion, you're running the risk that this all unwinds in a big way.
But it's not a market you can short yet either. So what are we, because, you never short a bubble, and really you need confirmation. So, I agree with you. There's a lot beneath the surface, bond yields being one, banks being another, that are giving us clear sign. There's breadth, there's things like RSI divergences. There's a growing body of evidence that would suggest that this is still a bear market rally. Obviously, in the NASDAQ, it's gone to new highs, so it's different. But retail exploded onto the scene within that kind of changes the structure. This is something unique, and that's okay, because everything looks unique. Each event is not like another. They all have a unique element. But what triggers do you need to see to go from observationally bearish to actually bearish?
And I feel like we answer that question regularly. A few times a week, we look at what is opening up the downside and how, if we want to participate on the downside, if the equity markets start to break down. What it's been for us and continues to be, the line in the stand is right over here. This trend line right over here. Let me go ahead and highlight it for you. Let me go ahead and just make it a little bit darker, because this is, and it continues to be, our line in the sand. Why we are above this trend line? Going back to, May. Going back to May, why we were above this trend line, we are bullish bias. Over here, as we started breaking below, I tried to go ahead and go here and attack to the downside. That move was quickly reversed. That was a fake breakout over here. And since then, we have been riding well above this trend line, meaning that buyers are firmly in control. When I say bulls, I mean buyers. And here we could see a couple of times we've seen sharp retraces. Got a little piece of this one over here. There was much more potential. And always we continue to lean towards both sides. Lately, we've been only looking at the buy side. Now, it's okay if you are, as Raul puts it, bearish minded, or have that lens of, things not adding up, and when we could see a possible breakdown, whether or not, the bubble could be blown much further, and we could see some type of really parabolic advance at the end. That also remains to be seen. Right now, things look technically as if they will continue to advance, with 32.32, the June high, being the next level. We've come up above it a few times this week. Maybe next week we break about. Maybe we don't. Maybe we come back and we test support down over here. Look how beautiful this will be. A test of the 31.25 horizontal support with that trend line support right there with it. That's a fantastic level. And as long as we're above there, and we will continue to be buyers off of support, any pullbacks into support, we are buyers. We will continue that until we do get a breakdown here of something technical. Whether or not the markets are going to break down and test the March lows is almost irrelevant. If it's happening, we'll trade it. We trade what is happening. Right now, that's not happening. Right now, we are looking and continue to look pretty bullish over here, continuing looking to buy any pullbacks. These were the last two pullbacks we were looking to buy. We bought off that support. We bought off that support. We were trading this both ways, actually, up until here. And now we continue towards that buy side. We're going to start this video off looking here at the S&P 500 on the 2-hour time frame, as price is coming into the 32 resistance. And that is the third time we have come up against this level. Going back not too far, just to June, that's where we had the June high. We are currently now trading at this important 32 resistance, waiting to see if we make another leg up. We talked about how we look to trade that. And we said that whether we got to break down out of this channel over here to the downside, targeting 31.83, or a breakout to the upside into the 32 resistance, that was probably going to be the next move here on the S&P 500. We broke out to the upside, right? Then you pulled back, testing that broken resistance, now confirming as support. Here's your entry right over there on this price bar, taking you now into the resistance going into the weekend with a stop loss now at break even. That's a free trade on the long side. See where we open up overnight as Asia gets going Monday. But right now,
right now we continue to look at further consolidation here on the 32 level. Again, it's a big one. It's an important one. And whether or not we're rejected here or able to make this breakout next will determine possibly a pretty big move here on the S&P if we are to continue this trend, which I don't see any reasons why we should not, or if we're about to have some type of volatile next couple of months and possibly be need to focus on the other side. The dollar is weak today. You could see that the dollar, like the S&P, was hugging that resistance line, consolidating right below it, possibly getting ready to break back above it right over here. The DXY adversely, the dollar, the DXY is the index that tracks the dollar, heavily weighted towards the euro, Japanese yen, and then pound, and then other currencies, a basket of currencies. And you could see that it is right here. It's building up along the 95.84 support. If that gives way, there is further downside, even as far as 95 early next week. If that gives way, we could be looking at some lower lows here on the dollar, perhaps even as low as 91. Down over here, we got some resistance we might be testing. If that's the case and we have that weaker dollar, expect the equity markets to be rising at that. Again, someone had mentioned early in this week that with Amazon trading at $3,000, everyone is like, wow, $3,000 Amazon. But what they're not talking about, just a few months ago, that was $2,000 Amazon. But the Fed printed another $4 trillion over here. Right? So which do you prefer? Think about it. The devaluation of the currency taking place, and you could see it being priced into assets as the Fed is printing. And by the way, the Fed's balance sheet went up this week. Speaking of which, you could see that this week markets also, think about it, slightly up. This looks like the Fed balance sheet looks closer resembling the Dow, which made the June high over here and is since struggling back a little bit. S&P back to where the June high was over here. Fed's balance sheet slightly increasing this week. This I know was payback of the swamp lines from other central banks who had borrowed dollars during the liquidity crisis. This over here appears to be Fed QE, which is still taking place daily. We're looking at roughly $80 billion monthly of the Fed monetizing debt. Looking here back at this chart, going back to the 1st of May, you're looking at the S&P performance, the day session, at the overnight session. You could see all the gains coming from the overnight sessions. What's interesting about this, and let me show you, you can see going back to 1993 that the S&P's gains have come after the 4 p.m. close and before the 9:30 opening bell Eastern time, and that's pretty substantial. That's a 580% return compared to basically break even over that time. That's usually significant. If you look at this over here, you could see the full day of trading in gray aligned with the after hours. So you could see that as long as you're holding 24 hours a day, you're not missing out on those gains compared to that if you were just holding them outside market close. Right, you could see you would have a higher gain, but not significant, not for the trouble it would be worth for most people to actually be placing those orders every day. Most people probably just want to invest in the S&P, the index for the longer term. This is interesting, guys. You could see that FANG stocks were down this week. It was biotech that were bid for the 3rd week in a row. What's interesting about this is we're seeing that rotation actually. You're seeing tech into biotech here on the NASDAQ. You're seeing funds flowing into the Dow, which has been leading, as well as the S&P. It's back up at its June highs. So you're seeing a rotation here, which in my mind is pretty healthy, that perhaps we have some further upside over here. Really important to take a look at the dollar index. The reason I say that we follow the DXY every day on the channel is because it looks like we are headed further down. It looks like that possibly we're going to take out these earlier lows over here. It looks like we have the potential to break down here on this is the trade weighted US dollar index. And if you look at this trend line over here, you could see that it looks like perhaps the dollar is about to break down. And if it breaks down pretty hard, that could send US equity markets up further. I also want to take a look over here regarding the US dollar, what it's doing versus gold. This is the US dollar for gold over here. This is, you could see the clear momentum favoring gold, and this does not look like it is continuing to stop anytime soon. Of course, there could be moments of hiccups like you saw over here. Look over here. This is the US dollar versus fiat, and you could see over here the dollar tapping out for a while right now and weakening, but all fiat currency versus gold is weakening. Gold is at new highs versus all fiat currency, and also now approaching highs versus the US dollar.
All right, so looking at going into Monday, the opening, we're going to be looking at over here, the overnight opening in Asia throughout London. On Monday, we're looking here at some traders have their stop losses already now that we've approached the resistance, move to stop break even. Other traders still holding down below this trend line, their stop loss. Nevertheless, there are other traders, there's the third portion of traders, which I include myself in, who are waiting for the breakout above the 32 resistance after taking profit earlier this week, looking for a possible and potential breakout next week before getting involved. If on a potential next leg upside, we looked at the dollar, we looked at the DXY, showing how if it breaks down, possibly that could lead to another leg up here on the NASDAQ. How much further the NASDAQ, the S&P, the Dow have to go to the upside, that's not something that we're trying to figure out right now, because we are in a bubble. And all we're trying to do is stay on the right side of the market here, as everyone has been now for several weeks. What we're looking to do and continue to watch is that 31.23 support. This trend line next week, that's the area we're watching. Any price action falling into this area of support, we're looking for to be buyers on resumptions off of it. A breakdown past this trend line, that's going to cause us to take an attempt at attacking the downside. We'll see if we'll get any follow through. Aside from that, there's no reason to be stop trying to pick the top. It's much harder to pick a top in a bull market than it is to just trade with the trend. So many of you continuously losing money keep trying to pick the top. Stop trying to pick the top. Do my best to get everyone on the right side of the market. Everyone, look forward to tomorrow's update where we'll take a look at the FX market, see what setups are going into next week. Have a great day, everyone.